let's just shift the focus to the editor's radar. And one of the stocks that you just flagged off, Tata Motors. Let's just talk a little bit more in detail about it. The SUV segment as well, getting quite competitive. And you've been talking about autos as well being in favor.
See, I've gone on record and I've said that Tata Motors will be stock of the year. So, with the underlying disclosure here that this is stock which, in a sense, we've been very bullish on as a channel. And there was logic when we turned bullish on it. But, sometimes you could ask yourself is that what is next? And that's the question you could ask yourself, what is next for Tata Motors now in the short to medium term? JLR is going to be coming out with good numbers. Cash flows would be positive. They are getting their operating leverage and the financial leverage benefit. But all that I think is something what markets know. Yeah. And because markets know all this number I think is 60% higher. Now you could ask yourself what's next. Now we always look at Tata with EVs and JLR, but there's another business which they have, which is the CVs. And this is where for the first time they're actually losing market share. But since I've talked about Ashok Leyland hitting an all-time high, why is Ashok Leyland hitting an all-time high? That is because Tata Motors is losing market share in the CV and the HCV market, which in a sense is a very high margin and a bread and a butter business and a business which is in a cyclical uptrend. Second, the SUV market is getting competitive. Like it or not, everybody wants to buy an SUV, everybody wants to own an SUV, badi gaadi, choti gaadi, we buy an SUV, that is important. But when you have 40 brands in the SUV market, when the new launches are happening in the SUV market, that means the pricing power with some of these SUV brands is going to go away. Sedan is losing market share, inventory losses will start there, but on an aggregate basis, SUV market also will get brutally competitive. So that's the question you would ask yourself is that what is next for Tata Motors now? I mean, don't get trapped with momentum in Tata Motors. Ask yourself a question why. A question which we were insisting everybody they should have asked why not at the beginning of the year. Now you could ask yourself what's next.
So, but will CV do the trick for...
they're losing market share. I'm sure Tatas will figure out a strategy, but as of now, they're losing market share.
Okay, so that's important. Don't get caught up in the momentum when it comes to Tata Motors. Let's discuss another stack of stocks, and it's interesting because we're monitoring some of these names then largely on the back of the fact that these stocks are trading above even the highest target price recommendations, and these stocks have been very closely tracked by analysts, Nikunj.
Somewhere you could ask yourself is that's how markets move. I mean, markets may always overshoot in the short term and then the analyst recommendations, they normally catch up. And that is what happens in a typical bull market. So while there is merit to say that, okay, DVs and SEAT and, even a Glenmark, the analyst targets have not been upgraded. But my limited point here is that this quarterly number will actually be very important for some of these group of stocks. ICICI Securities does not have relevance because of the merger now. Look at MRF. The difference between the current market price and the highest target is 20%. SEAT again 20%. So tire is one category where if numbers are not strong, you could see a sell-off because analyst targets versus current market price, if numbers are not strong, the stock is going to go down. Yeah. Similarly, DVs. The stock has run up and analysts have not caught up. If numbers are not strong, DVs again could come crash landing down. DVs, what is the halo stock, came crash landing down, has given you a bounce back, analysts have not upgraded. So if you're looking at this matrix here, tire stocks and DVs as a category, as a company.
Okay, there you have it. Those are the stocks on the editor's radar. Aisha, would be interesting as well to get in Sanjeev's take on these names.
Oh yeah, absolutely. Tire, Sanjeev, we've been talking about MRF hitting that 1 lakh mark, the entire tire pack surging along with autos. You think opportunity there still?
Well, like Nikunj pointed out, any disappointment in numbers or even meeting of expectation may see profit booking. But who's to complain? 180, Apollo Tire is 400 plus. MRF is above 1 lakh. Look at SEAT. So, look at Balkrishna Industry. So I can go on, because these are pedigree names. We own some of them as a disclosure. But like we said, Aisha, the best is that targets keep getting revised upwards. And the same people who were gaining for 15,000 on the index are now talking of 21,000. So markets chain at a dime. It's the money flow and it will always chase the beauties. Yes, DV's lab is been a big outperformer and I think that will continue. In the pharma space, in contract farming, in API, it is doing extremely well and the numbers will be there. But like we said, there is little room for disappointment there is little room for upside because most of the numbers are pricing in. However, if you took a contrarian view, look what IT has done. For all the soothsayers and the FIs who were negative on IT with JP Morgan's biggest downgrade, sorry, as a disclosure, the index is up 21% from the day they downgraded. In the last 3 weeks, it's up 8.5%. I mean, Infosys Tech Mahindra, LTIM have taken your breath away despite being lackluster numbers. So the sheer underweight ownership is going to drive growth. Titan will come out with this quarterly results, which will be equal to the last 3 quarters. Mind my saying, this stock will be 3,500 by Diwali.